Hello and welcome. My name is Kate Mereand from the Department of Small and Local Business Development, and you are here today for our Build Back Better series. We are so excited to have with us today Omar, Velasco, and Daniel Friedman from the Latino Economic Development Center. Hello to you both.
Hi, Catherine. Thank you for having us.
Good afternoon.
We're so excited to have you on and talk a little bit about LEDC's important role in our small business ecosystem, and to talk a little bit about both your general services and what you've been doing with the Paycheck Protection Program. So maybe to start out, could you just tell us a little bit about who and what LEDC is and what you do?
Sure. We are a nonprofit. We are certified by the Department, by the Treasury as a community development financial institution. We are a one-stop shop because we provide not just business loans, but also free of charge business advice to our clients. We don't discriminate. Everybody can apply for those services. And we differentiate ourselves from traditional financial institutions because our underwriting process is more, it's a holistic approach, and we don't take, for example, very consideration of the credit report or the credit score. We take many aspects into consideration to assess the creditworthiness. And also we try to establish a long-lasting relationship with our clients. So they start by receiving technical assistance from a business coach, and then they can go for a business loan, hopefully up to $250,000.
That's fantastic. And so you work with anyone across the District of Columbia, and I think also up in Baltimore on different types of lending. Is that correct?
Yeah, that's correct. So we have our headquarters here in DC, but we also have in Arlington, Virginia, Baltimore City, and Wheaton, Maryland. And recently we opened in Puerto Rico.
That's fantastic. And so you are part of the ecosystem that helps small businesses get capital. And then let's talk a little bit about that. And you said a little bit, but to go a little bit deeper, why might someone come to a CDFI like LEDC instead of to a traditional bank when they're first starting out with their business to get capital for their business?
Sure, I can take that question. So a lot of our clients do try to access traditional financing first, and that is one of our mission fits, is those that are rejected. But a lot of clients may expect the result and anticipate that and come to us instead because their credit score is below 700 or whatever the requirement might be, or particularly certain business sectors like the food sector is often kind of restricted from accessing traditional capital. But we have a ladder that allows people to start pretty much anywhere with like a credit building loan, small consumer loan, $500 or $1,000 if they need to establish their credit history or maybe do some slight repairs. And then we start at $1,000 with a seed loan if they need to get their company going, or a startup loan up to $20,000. And then we kind of grow together. After 6 months or so, they can reach out for additional capital, what we call our growth loan, which does go up to $250,000. And hopefully, their company is on a trajectory with our support, our TA, our loan officers, that allows them to keep growing, build that personal and business credit history so that they can access traditional financing at the end of all of that.
That's fantastic. And you said a little bit about the relationship that someone might have with a lender like LEDC. Can you talk about why having a relationship with your lender is so important for small businesses?
Yeah, well, I think capital in general is very critical for growth. You don't want to deplete your resources. It's helpful to borrow and write off that interest expense and leverage everything in the toolkit so that your business will grow. And so we're able to connect with our clients, and have a better customer service so they understand what the more traditional lenders are looking for. And obviously we're clear with them about what we're looking for. And so you kind of open that dialogue. This is how the system works. This is what you might need to tweak, and we can help you with this or that. And so that relationship gets built. And so the confidence, I think, also grows, and they're able to, reach their full potential.
I'd like to add something. So when you know your lender, when you establish that relationship, it helps expedite the process also. And sometimes even just for this PPP loan, for example, some lenders didn't open application for clients outside of their clientele, just for their clients. So it's important because you never know when you are gonna need your lender for these types of loans or programs.
Let's transition and talk about PPP, the Paycheck Protection Program, which a lot has been written, and there's a lot out there about this big federal program. And we know it took a little bit of time before the federal government allowed CDFIs to be making Paycheck Protection Program loans. Why is that so important, and what has LEDC done since you've been given the option to be able to provide these loans?
Omar, you want to take that one?
Yes, as I said, many businesses were working with, for example, credit unions. They didn't have a traditional account with a big bank. So when the first round came, they didn't have an institution to go and apply. So when they went to traditional banks, because the volume of applications, many of them rejected those new clients. And so that's why for the second round, and I think that the government decided to allow CDFIs to provide those loans. And so LEDC jumped in, and we had to raise funds because basically the money didn't or the money doesn't come from the SBA. So the lenders have to put the money up front, and the SBA is just the guarantor of the debt.
Oh, that's super interesting. And so you not only started making loans, you had to raise funds in order to be able to make those loans, which you have done.
Yes.
And you continue to have loans available. There's another aspect to what CDFIs do, which is all that technical assistance and training that you were talking about. If someone goes for any type of lending, including PPP with LEDC, what are some of the technical assistance and training pieces that they would also be able to get if they were going for that?
Question. Well, I think one of the items that comes to mind is when the independent contractors or even some sole proprietors have been applying for PPP. Those tax returns have essentially an income statement component on the Schedule C, but not a balance sheet, which is something that we do need to process the applications with the SBA. So our business coaches have been able to work with the clients to explain, what a balance sheet is and how it could be applied to their situations, even though they are, a 1099 contractor. They may have, at least cash or some assets that they use or payables, whatever it might be. And so able to walk them through that process, as well as, just give guidance in terms of all the forms, how the program works overall, and answer any questions, doubts that they may have.
Okay, so just to unpack that, I know you mentioned a couple of different technical terms like Schedule C and other pieces. And so the loan has sort of requirements that both LEDC has and that maybe come from the federal government, but all of those requirements are pieces that you can work with folks on, even if they haven't been a client of yours previously. Is that correct?
Absolutely. Yeah, we are definitely welcoming many clients to our program, and it's a great thing to build more connections with the community.
So for someone who might be afraid of lending, right? So, taking on debt, there's a lot of reasons that people are concerned, are uncomfortable, and don't want to head in that direction. Is there anything about the PPP loan and the forgivable nature of it that might make someone want to think twice and think maybe this might be a product for me, even if traditional lending is not?
So
Yeah.
I can take that.
Go ahead, Omar. Yeah.
So even if the loan is not forgiven, this is the lowest cost funds that any business can get at this point. So it's just 1% interest rate, and it has a deferment period. It's going to be deferred for 12 months right now, I understand, and also 40% of the loan can be used for other expenses, not just pay the payroll. So if you let's say if you don't use the funds in a way that you are allowed, you still can get a portion forgiven. So it's worth getting those funds, use them in a proper way, and then apply as soon as possible for forgiveness. But as I said, if you don't get that money forgiven, is the cheapest loan that you can get in the financial market.
So for independent contractors and solo entrepreneurs, how does the main portion of Paycheck Protection Program work for them, that payroll piece? They can pay themselves?
Correct.
Yeah. So if I may add into that, the cool thing about the recent rule change in June is that it extended, well, first to Omar's point about the cost of funds, the term of the loan is now 5 years for everyone at 1%, which is great, and it's not forgiven. But it also said over over the 24-week period now that was extended from 8, the owners are allowed to pay themselves up to 2.5 months worth of their 2019 compensation, which is exactly equal to the loan amount. So they're able to use up to 100% of the loan proceeds to pay themselves as independent contractors or sole proprietors, and also still able to use up to 40% on interest or rent or utilities as it relates to the business. So it's much more flexible and better position for them.
So if someone was trying to figure out how much money they should take in the loan and then how they should spend that loan, is that something that LEDC would help people with as they were applying?
Correct. Exactly. And I also want to add that applying for PPP doesn't exclude them to apply for other relief programs. So they can also apply for unemployment benefits. The only thing is they cannot, for example, pay to themselves for a period of time that they are also claiming the unemployment benefits. But because this is just 2.5 months of your own salary, you can use the unemployment benefits after that period or even before.
That's really helpful. We know that pandemic unemployment may be ending. It's scheduled to end at the end of July, and currently scheduled the Paycheck Protection Program, people have until August 8th. And so there may be some reasons that people would want to look into that. Well, is there any other just really important things about lending or LEDC that you would want to share with folks today?
Well, to Omar's point, perhaps worth mentioning that the Economic Injury Disaster Loan has also reopened. And that is, I believe, a 3.75% interest loan with a 12-month deferral, and it's a little more broad in it, the way that you can use that. So it is also sort of complementary to PPP, and LEDC's business coaches can certainly help with that application.
That's fantastic. And I want to say thank you both for coming on. I'll make one more quick point about the PPP loan, as we know that we saw some rule changes also regarding collateral consequences. And so if you had looked at this loan earlier on and you saw that some of the criminal history pieces were keeping you out of this loan, some of those things have changed and have opened up a little bit more. And so whether it's this or if you're just looking for technical assistance, I think you can work with LEDC through some of your classes without taking lending. All of these things are available to you. So I want to say, Danielle and Omar, thank you so much for coming on with us today. My name is Kate Mereand. I'm a program manager at the Department of Small and Local Business Development, and thank you for joining our Build Back Better series.
Thank you.
Thank you, Kate.